But the flavor of the moment is metals. The flavor of the moment is steel, Tata Steel. And we have an expert joining us, Amit Dixit, research analyst at Edelweiss Institutional Equities. Amit, Tata Steel is, thank you for joining us. Tata Steel is up 6% at this point in time. And there are targets on the street going all the way to 630. What's your own take on the price target?
Yeah, hi. So yes, we believe that we have a positive view on Tata Steel, and the stock has run up quite a bit based on the possibility of them divesting the Netherlands business, and of course brokerages have increased their targets. So our own target is 565 rupees a share at the moment. Now we have not taken any impact of possible benefits that they would get from divestment of Netherlands. We will cross the bridge when it comes. However, our price target is based mainly on the performance improvement on organic front, and therefore I repeat that our 565 doesn't take anything into any positive impact of this particular divestment coming through.
In fact, I was going to ask you, that was my next question. I mean, even if you look at just the pure operational performance for the India business has been so strong, Amit, the EBITDA per ton coming in at 13,000 plus rupees per ton. Do you think this is a sustainable performance, and what are you penciling in for the second half of the year?
Well, today I would like to leave you with a couple of data points here. So first of all, the performance of India business was perfectly in line with our estimates. But consider here that Tata Steel themselves have guided that realization could go up by 4,500 to 5,000 rupees a ton in this particular quarter. We are talking about Q3. And from all looks of it, we believe that the prices look sustainable, the run looks sustainable, volumes look sustainable. So if you just directly put in the price increase, you will find that EBITDA per ton of 17,000, by the way, is not something which is like a wishful thinking at this stage for Q3. Now, if you compare the whole year EBITDA per ton, so we have still taken into account some 13,000 odd rupees. So because prices keep on going up and down, but definitely if Q2 was a surprise, Q3 is going to be a blockbuster for the company. For us, though, we are more excited by European business. Now, if you remove that carbon provisioning front away, European business actually delivered a positive EBITDA, which came as a surprise to us because we were factoring in some minus $46 a ton negative. And looking how European splits have gone up, I believe that Tata Steel is firing on both the fronts, that is India business as well as Europe business. So operationally, both the businesses look pretty strong. And add to it the flavor of possible divestment. I mean, then you have a perfect recipe for a stock that can give you much higher returns.
Okay, we'll leave it at that. Amit Dixit, pleasure speaking with you. Thank you very much for joining us and giving us your take on the Tata Steel numbers and the trajectory of the stock. At the moment, it's charting a very strong trajectory, you will have to say. We've got a lot of earnings as well. We had good numbers from Eveready. We have good numbers from Bata.